when I look out my window.
Hello traders, Gary Wagner with the Gold Forecast here. It's approximately 10:15 in Honolulu, Hawaii. It is Tuesday, the 10th day of May, and this is the daily report for gold. We do have gold for the third day in a row trading higher off of its highs, currently up about $2.70 at $15 and change. You see the current print at 15.1520. We are looking at a 240-minute candlestick chart. Now, just as we did in our silver broadcast this morning, today's focus is going to be on the anatomy of a B, C corrective set of waves, the corrective phase within the Elliott wave cycle. As you can see, we are currently trading just up against a 50% retracement, that as at 1519. If we look at the high of this particular candlestick right here on the top, this 1, 2 candles, you can see that it's absolutely come just up against that, and at least on a tentative basis, at least for now, it has stalled and has found some resistance there. That gives us a reason to take a serious look, and let me explain why. When we are doing our forecasting, our Elliott wave model forecasting, and for example, you can see here we get to our double top. This is that 1577. The second attempt, it doesn't really take that out, but just comes shy, and then we go into our corrective waves. Our corrective waves, of course, are going to be an A, a B, and then a C. Now, in terms of straight forecasting in Elliott wave, we look for this B wave, and the B wave is this activity right in here. We look for that to be anywhere between 50% and 75% on the high side of the move found in A before. This is that bounce, but before it goes into that last corrective component. That last corrective component, of course, is going to be our C wave. I am anticipating C to be a very, very shallow wave, but I could easily be wrong. We'll have to see what the market wants to do. But the fact that it has come right up against this benchmark that we were looking at, this 50% benchmark, is giving me a reason to believe that there is a distinct possibility that what we could be seeing here, and again, this is sheer Elliott wave forecasting and speculation on my part, but I'm speculating with some math behind it. But it is quite possible that we will see this be the end of B, and we will begin to go into our C. We are long from 1488. 1488. You know, the way these numbers are going, sometimes I get confused with is it 14 or 1500, but absolutely, we're long from this point. So we have at this point some sizable profits, but we have a lot of profits to gain from the last drawdown. We are showing a huge profit overall on last year, a profit this year, but I want as many of our trades to be profitable. We took a larger drawdown than I really expected or really thought we would see. Many times my stops that I place in initially are what I call a doomsday stop. And what I mean by that is if Helen and Handbasket come true and the market is just in a tailspin, I need something there to protect us. In this case, of course, we had our stop down, I believe it was around 74, hit our stop, did go lower, went to 61. The only way to have avoided that would have been to put a stop at 58, and 58 was not a number on my radar at that time. But right now, when we consider it, we do have about $25, $30 on the trade. And the only thing I can consider that makes some sense is to trail our stop up. So the question becomes, well, where do we trail our stop up? The only place that I'm actually seeing any kind of band of support is if I look at these lows that are right in this area, we'd need to place them below those lows. And to do that, of course, we'd have to go back to this $1,500 benchmark, which, as we know, is a benchmark that they tend to test readily. We've seen that tested now on a couple of occasions. But my sentiment is, my gut feel is that 1500 is going to provide some support. So I will be sending out a special email later on today. And one of the things, it's a suggestion that I had from one of our subscribers, and it's an excellent one. And that is, anytime any of my emails contain either moving of a stop or a special notification to enter or exit a market, it will have trade alert in the subject line of the email. I will be monitoring the markets throughout the day. We do want to be careful in this area. The other approach and the other side of it is that in this market, unlike previous markets where this doji is absolutely significant as a top formation, this would be really indicative of a bearish reversal because it's a star in the evening position. You look for follow through. Rather than that, you get these small bodied candles very much prior to big moves in the market. They tend to, in terms of the size of the candles, you see they get very, very small. It's a consolidation period. And then following that consolidation period, of course, what you witness is a spike up. In that way, we might be just witnessing that. So I want to not limit our upside. I really want to capture as much upside as possible on this particular trade. We are hitting a band, so what we might see is the market come up like this, trade to this band, and then move higher before trading down also. And so those are the scenarios that we really want to look at, and typically that's going to be our game plan for right now. We've got a great trade underway. Even if by chance this market did come down, my sentiment is we're going to witness a shallow C and then position ourselves the right way, because what I am most excited about is at the conclusion of this ABC, however it falls and however it ends up working itself out, once we conclude and we're at C, whether it's actually a deeper retracement or a retracement as I believe that's going to be shallow, the brilliant and great news is now we are looking at a final impulse wave 5, and that final impulse wave 5 should in fact take us to new contract highs. This has been Gary Wagner wishing you as always good trading. We will talk to you tomorrow for another daily review and update. Bye-bye.
Many sights to see, and when I look in my window, so many different people to be, that it's strange